Frankly, the federal government was not as swift to act in preventing abusive lending practices. Instead, state governments were the first to respond to this need and translate a heightened concern over the proliferation of subprime mortgages into action.
Congratulations to Larry Ulick. We've moved on to our keynote tonight, and the next honoree is so big time that he requires not one, not two, but 4 introductions this evening. The Honorable Richard Neiman is receiving the Corporate Award tonight for his work promoting international cooperation with financial services and public service. So I'd like to kick off the start here with Kevin Barnard. I'm going to ask him to come to the stage. And I chatted quickly with Kevin beforehand, and he said that he has known the superintendent for, I think, 35 years. So I'm expecting to get some really interesting nuggets and maybe some colorful ones from this presentation. Kevin is a partner at Arnold & Porter, where he heads the financial service practice. So, can I ask Kevin to come up? There you are. I missed you there. Here.
Thanks very much, Margaret, and good evening, everyone. I'd like to give a special greeting tonight to both of our distinguished honorees, as well as to my fellow board members and colleagues at the Foreign Policy Association, who I think once again have given us a wonderful occasion to get together and celebrate the careers and accomplishments of 2 distinguished gentlemen, both of whom I'm happy to say are friends of mine and have been for many years. It's a particular pleasure for me tonight to make just a few remarks as part of the tribute to Richard. As Margaret has already indicated, we've known each other for a long time. At a personal level, this is a chance for me to look back very fondly on the accomplishments of someone I've known for just about 35 years, beginning when we were young lawyers together at the Treasury Department, starting our careers in what became banking for both of us in different ways, at the branch of Treasury overseeing national banks. And Richard, very quickly for me, became someone who then and now has been a good friend and a colleague through many, many years. At a professional level, it's an opportunity, as another pretty challenging year in the financial markets and for financial institutions comes to an end, to express my gratitude, and I know that of many others, for the contributions and sacrifices that he, for one, has made as the principal guardian of our financial system here in New York. I was the general counsel at the New York State Banking Department in the 1980s, and that was a time when a number of very fine 100-year-old plus institutions, which really contributed to building New York, names like Bowery Savings Bank and the Dollar Savings Bank, Siemens Bank for Savings, were suffering the extreme pressures of that day of an earlier financial crisis. And I lived through that in a small way, what Richard and others have lived through more recently. And I certainly have great appreciation for the work that Richard and his colleagues at the banking department have done in the past few years. At a time when it seems that all roads may begin and end in Washington, New York, I think, really does remain the financial center of the United States and in many ways the world. And the sound judgment and hard work and personal sacrifice, we all know that in government you don't stay for a long time because of the high pay. The personal sacrifice made by Richard over the past 3.5 years is a big part of the reason that New York continues to be what it is today for our financial sector. Richard's qualities have been recognized certainly outside New York, including through his service on the Congressional Oversight Panel, which has spent the last 2 years or so reviewing the TARP program, which continues to get better reviews now than it did at the start, and his work on a national coalition of state regulators addressing the home mortgage foreclosure crisis. He manages to do all of that together with charitable and community work, and most importantly, by also being a devoted husband and father. 35 years ago, I thought I saw a very fine lawyer, a clear thinker, and a collegial teammate whenever I went by Richard's office. Now I can say that in addition to that, I see a dedicated, selfless public servant who's quietly earned the thanks of all New Yorkers for bringing those same qualities to his work as New York's top financial regulator. It gives great pleasure tonight to see him recognized for being the man who he is. Richard, again, congratulations.
So I promised quite the introduction list. So that was just the beginning there. And as Kevin said, the reviews of TARP, I think the CBO said $50 billion is all that's going to be left on the hook at this point in terms of TARP, which is pretty amazing considering $700 billion is where we started from. $50 billion, you could get halfway to a European bailout, right? Anyway, perhaps that's too nerdy of a joke. Let me ask now, from Kevin, we move now to Michael Helfer. He's General Counsel, Corporate Secretary at Citigroup. So, Mr. Superintendent, if you're not already blushing, we're working on it still. Michael, can I ask you to come up here to the stage?
Thank you. Will Rogers was asked a long time ago and far away how he would recommend dealing with the German U-boats that were sinking American shipping in the early part of the last century. And he said, it's very simple. You drain the Atlantic Ocean, U-boats go to the bottom, you send in the cavalry, they capture the U-boats, and you're done. And the reporter, probably from Bloomberg, who asked this question, said, wait a minute, you can't, how do you drain the Atlantic Ocean? And he said, look, I'm in policy, not operations. And we have an honoree here today who is in both policy and operations, and who has had a career full of success in both the private and in the public sector. From Citi, early in his career, where he was recently falsely accused of being having been the general counsel, but he was much too smart to do that, to D.D. Waterhouse at the OCC, the controller of the Currencies Office and the New York State Banking Department. It is of great value to both government and the private sector to have people who have experience on the other side of the table. Unfortunately, it's becoming more and more difficult for bright, ambitious young people to follow Richard's lead and work on both sides of the table throughout the course of their career because of a deterioration of trust and fair comment, and that's a loss in our society. As you know, the department that Richard leads supervises the vast majority of foreign banking organizations in the United States that are active in the United States, representing over 80% of foreign bank assets in the United States. Richard, therefore, stands at the very center of the wide range of issues that confront international banks and their regulators today. It's particularly appropriate, therefore, for him to be honored by this fine organization. Fortunately, for those of us who are also involved in these issues, Richard is a strong, thoughtful supporter of a vibrant, competitive, and sound international banking system. This is critically important right now when local political and policy pressures in many countries, including the United States, are leading some government officials to turn inward and to consider or to propose rules or laws that could impair the free flow of capital on an international basis, restrain international trade, and have adverse consequences for economic growth around the world. All of us are very fortunate to have a leader like Richard in times like these, and it is a great honor to be able to be one of his many introducers. Thank you.
So next up here, I'd like to ask Stephen Elliott to come to the podium. He's Senior Vice Chairman of Bank of New York Mellon, also a good friend of the superintendent. Stephen, can I ask you to come up?
Good evening, everyone. I'm substituting this evening for Bob Kelly, the CEO of BNY Mellon, who is a close personal friend of Richard. Unfortunately, Bob had to be in Washington this evening with the Federal Advisory Council, but he obviously wanted to be represented this evening, having known Richard for some 15 years, going back to the days of T.D. Waterhouse and the time that Richard was general counsel and Bob was on the other side of the transaction at TD. So Bob very much felt honor-bound to relay his admiration for Richard and his accomplishments this evening. As an aside, realistically, though, between you and me, I'm sure Bob realized that it's never a bad thing to be kind to one of our key regulators here. Anyway, in this case, it's fairly easily, because Richard is a man of impeccable values. He's fair, honest, and always delivers on his word. His jurisdiction is the financial capital of the world, so he has tremendous regulatory responsibilities. And as Bob likes to say about Richard, he just gets it. He gets the importance of working collaboratively and building strong ties with the New York Fed. He understands the value of having both state and federal supervisory powers. He gets the need to listen and to share, and he gets the tricky balance between maintaining the financial strength of the system and ensuring banks remain globally competitive. We saw all those qualities in action throughout the financial crisis. Richard was a steady hand during a very turbulent time. He maintained a balanced view of the strengths and weaknesses of the institutions under his jurisdiction, and he applied fair but high standards to all institutions. And the financial system is all the stronger for his good work, as is the community. Richard has involved himself in organizations like the Henry Street Settlement and the Harlem Education Activities Fund that are preparing people in need or at risk for a life of financial independence. That alone is truly extraordinary. So on behalf of Bob and BNY Mellon, thank you, Richard, for your public service, your contributions to the community, and the example you've set for all of us. Again, congratulations.
So I didn't get to go to the gym today, but I'm getting my cardio going up and down, laying the way as we get to our superintendent this evening and our keynote. Next up, I'd like to ask a gentleman I just had the honor of meeting here tonight who's been very, very involved with the Foreign Policy Association for many years, and that's Mr. Archibald Cox. I'd like you to come up, if you would.
Well, I'm not going to make another introduction because I think that the introductions we've had have really said it all. Richard is been a wonderful superintendent of banks for the state of New York, as everybody I think in this room knows, and it's a great honor to ask him to come up here and to present him with the medal tonight. And I think he's also going to make a few remarks. So, Richard, if you would come up, I would much appreciate it. Second. Now, the citation accompanying the Foreign Policy Association medal reads as follows: for his demonstrated commitment to international cooperation and for his dedication to public service and consumer protection, the Foreign Policy Association is proud to bestow its medal upon Richard H. Neiman, Superintendent of Banks for the state of New York. Richard, congratulations and thank you. Excuse me.
Great. Thank you, Archie. Thank you, Kevin, Mike, Steve, for those very generous and heartfelt remarks. Seeing so many friends at various points in my career means so much to me. I mean, there are people here who I've known since college. There are many people like Kevin and others who I started at the control of the currency with. In fact, there's an intern here who I hired for a summer job who's now a partner at a major firm. There are interns who worked for me at Price Waterhouse who are also now partners and seem to be doing quite well. One of my own mentors from the OCC and Price Waterhouse, Bob Bench, is here, who traveled from Boston. I am very proud that he's here. And also mentioning the OCC, I'm extremely honored that John Dugan, the former comptroller of the currency, is here, and I very much appreciate that. Hearing all these comments about how long people have known me, I almost feel I feel too young to have so many longtime friends. It is an awkward feeling to have people talk about you, knowing you for over 35 years. When Noel called me several months ago to inform me of this award, I did not realize that the proposed date of the dinner was on the first night of Hanukkah. I must admit that I do feel a bit guilty not being home with our two young daughters, ages 11 and 12, lighting the candles and exchanging gifts. They love it. I promise I will be home after, but I'm not sure what they love more. Is it the tradition of the holiday? Is it the exchanging of gifts? Or maybe it was the spectacle I made 3 years ago when lighting the candles, my shirt sleeve caught on fire. One of the kids she kept the video camera going the whole time. The other one yelled at me, "Stop, drop, and roll." She had just learned that in school. And every year they keep asking me for a repeat performance. Hopefully none of you will ever see that video on YouTube. So today I have the FPA to thank for possibly saving me from real harm. But in seriousness, I will take advantage of tonight's coincidence by noting that the word Hanukkah in Hebrew means dedication. And this is fitting, as this evening is dedicated to public service. Award recipients often rightfully start off accepting such an honor by acknowledging the many colleagues and coworkers who made receiving the award possible. Tonight is no exception. And really, any one of those dozens of people could have received this award in my place. I am so fortunate that several of my senior colleagues from the banking department are here tonight to share this honor. This talented group combines dedicated career public servants with seasoned lawyers and bankers who joined me from the private sector. They are the reason I am here this evening. In preparing my remarks, I came across a letter from Senator John F. Kennedy, which he wrote in 1960 to this very association, the FPA, in which he said, "The complexity and multiplicity of the foreign policy questions facing the U.S. today places a premium on intelligent understanding of the issues by the widest possible cross-section of citizens. I am particularly impressed with the approach which the Foreign Policy Association has taken." I certainly don't have to tell this group the importance of President Kennedy's words today. The only difference is that President Kennedy could not have imagined the global interdependent financial system that would emerge 50 years later. The complex foreign policy questions Kennedy wrote about then overlap more than ever with the complex global financial issues of today. This new reality only heightens the importance of his call to public service. That's why I'd like to accept this award on behalf of my staff and all of those in New York and across the country who exemplify Kennedy's vision for the widest possible cross-section of citizens to engage in public service. The banking department has certainly given me a once-in-a-lifetime opportunity to contribute to issues in financial reform that will have an impact far beyond New York and long after my tenure as superintendent. The department has a wide range of institutions under supervision, from the largest banks, such as our oldest, Bank of New York Mellon, and our newest, Goldman Sachs Bank, To the thousands of mortgage, I don't know why that always gets a laugh. To the thousands of mortgage brokers, non-depository lenders, and other providers of financial services. I believe this diversity in supervisory responsibilities gave me a unique vantage point on the financial crisis, particularly on the role of the states in a reformed regulatory system. The crisis has also illustrated that consumer protection is not a separate social policy concern, but is inextricably linked with safety and soundness. We experienced the implosion in the mortgage market precisely because this connection was underappreciated. A loan that is unfair to consumers is not prudent bank business. And as the origination of subprime and non-traditional mortgage loans increased, frankly, the federal government was not as swift to act in preventing abusive lending practices. Instead, state governments were the first to respond to this need and translate a heightened concern over the proliferation of subprime mortgages into action. For instance, states like New York and North Carolina identified the seeds of the subprime crisis amidst dangerous lending practices over 10 years ago. The irony is that states were forced to stand down their enforcement efforts by federal regulators who were asserting preemption and calling for exclusive authority at the federal level. Even worse, appropriate federal standards were not developed to replace the preempted state laws. That is why my consistent message as superintendent has been to call for a renewed level of coordination among state and federal financial supervisors, a cooperative federalism. By this I mean we can achieve appropriate oversight and national standardization while making the highest use of the expertise and resources at each level of government. I believe this vision has been accomplished to a large extent through the Dodd-Frank financial reform legislation. I see Dodd-Frank as a reaffirmation of the state-federal dual banking system that has served this nation well for 150 years. Reform could have eliminated a meaningful state oversight and enforcement role, as some had called for. It could have removed supervisory authority from the FDIC and the Federal Reserve, the agencies that partner with the states, and created a single monolithic regulator. It could have undermined state supervision of the vast majority of branches of foreign banks operating in the U.S. But instead, Congress confirmed that the state role is critical, providing checks and balances, more cops on the beat in enforcement, and serving as a proving ground for new laws. I am especially proud that New York has led the way in developing enhanced consumer protection laws and regs, which could serve as a model for action by the new Federal Consumer Financial Protection Bureau. The banking department worked with the governor to pass landmark legislation to create new protections for borrowers at risk of foreclosure, as well as licensing and duties of care for loan originators that will prevent future crises. As a result, New York has enacted the most comprehensive conduct of business rules in the country for mortgage loan servicers, a sector that was largely unsupervised nationwide. We were able to accomplish these reforms because we have a mix of professional staff members who have been on both sides of these issues at some point in their public or private sector careers. They understood with confidence the extent to which we could craft progressive reforms without harming the very consumers we were trying to protect, for example, by jeopardizing access to credit. The same type of cooperation that we are striving for in the U.S. between states and the federal government also holds true on the international level. In the wake of the financial crisis, an effective framework for cross-border supervision has become an even more compelling imperative. Financial and technological innovation has rapidly interconnected global markets, but our supervisory infrastructure has failed to keep pace. So how should we move forward as an international community? What strategies will best promote financial stability through cross-border supervision that is conducted primarily by national regulators? I believe the key is to harmonize standards whenever practical and to strengthen mechanisms of mutual accountability among financial supervisors. That is precisely what nations are doing under the auspices of the G20 and the IMF. While striving for greater convergence on global financial issues, I believe it is healthy to recognize that progress often comes in stages. There is often a tension between a nation being a first mover on an issue and striving for global harmonization. For example, for the sake of greater international uniformity, the U.S. could have abandoned the leverage ratio, which is the safety check on the use of risk models in determining the adequacy of bank capital. The financial crisis made clear, however, that the FDIC was correct in insisting on retention of the leverage ratio in the U.S. What was sometimes misinterpreted as intransigence became an occasion for meaningful reforms under Basel III, which now includes an international leverage ratio for the first time. Far from frustrating international progress, this appropriate use of discretion by a national supervisor actually reinvigorated our shared goal of creating even more effective international capital standards. Multiple national regulators working together yield better results in setting a robust framework for financial stability, just as multiple judges are used in the Olympics to achieve a fair outcome. As with the state-federal dynamic in the U.S., it may look messy from the outside, but this cooperative internationalism works. An important component of cooperative internationalism is the way we coordinate in the everyday work of cross-border supervision. In New York, we have agreements in place with regulators from around the world and have developed very strong supervisory relationships with those home countries. In fact, over 80% of the assets of foreign banking organizations in the U.S. are under New York supervision. While banks from many parts of the world were revisiting their business plans, the latest wave of foreign bank expansion in the U.S. is coming from China. New York has recently licensed the first branches of banks from China to open in the U.S. in almost 20 years. This reflects movement toward privatization in China, the growing trade between our countries, and New York's continued role as a hub for global finance. With economic growth and financial sector expansion coming from the emerging markets, we are seeing new partners in global supervision. China, for instance, is actively involved in the Basel process and other international forums. They are also further developing their own supervisory framework, which includes the well-established concept of supervisory colleges. Supervisory colleges are working groups composed of the relevant regulators of an international banking organization coordinated by the home country supervisor. Key functions of these colleges include information sharing, assessment of cross-border risk exposures, and coordinated examinations. I considered it critical to attend the China Bank Regulatory Commission's first supervisory college held in Beijing last year for its largest bank, ICBC, and in fact, the largest bank in the world by market cap at the time. This non-binding mechanism is the best practical fit for engaging with supervisors from jurisdictions with legal systems that are very different from those in the U.S. The past few years of market turmoil remind us that globalization is about more than just economic growth. It is about cooperative relationships. The Basel process and the G20's framework for financial stability are critical guideposts, but financial stability is ultimately achieved in the everyday supervisory work by the employees at agencies like the New York State Banking Department and our U.S. and global counterparts. I am honored that the governor chose me to lead the banking department during this time of profound change for the financial system. My goal was to bring a constructive state perspective to the task of financial reform, whether through my position on the TARP Congressional Oversight Panel or in the work with our federal and international partners. I am sincerely honored to receive this award from the Foreign Policy Association tonight as a testament to the enduring value of the state role in an increasingly global world. Thank you, Archie and Noel, and for the friends who came tonight, and for all of you for coming. Congratulate Larry Ulick. It was a special night for me to share it with him. And most of all, I want to thank my wife, Eileen, without whose support and encouragement, and particularly her patience, I would not be here tonight. So thank you. I love you. Thank you all.